Hello all, welcome you to the course on corporate laws and governance. In this video, we are going to learn about the independent directors and auditors. First, let us look at the meaning of independent director. An independent director is a non-executive director. A non-executive director is that one who would be involved in the who will not be involved in the day-to-day activities of the company, and the independent director actually adds value to the company in terms of improving the credibility of the company as well as the following the corporate governance norms. So, a managing director, a whole-time director or a nominee director cannot be the independent director of the company. For a listed company, it is mandatory there should be at least 1/3 of the total directors as the independent directors. For an unlisted public company, if the unlisted public company is going to have a paid up capital of rupees 10 crore or more, if they are going to have a sales turnover of rupees 100 crore or more, or if they are going to have an outstanding debentures and deposits of rupees 50 crores or more, then it is compulsory for that unlisted public company to have minimum of 2 independent directors in their board of directors. If the unlisted public company is going to be a joint venture company or a wholly owned subsidiary or a dormant company, then even if they fall under those 3 provisions, it is not important. They need to go for the independent directors. And the public company, or whether it is listed or unlisted, they can have more independent directors if they are going to have the audit committee, which requires the presence of more independent directors. Now, let us look at the qualifications of an independent director. An independent director should possess appropriate experience, skills and knowledge in the field of management, law, or in the field of corporate governance, marketing, sales, research and development, or any other relevant field. And the relatives of the independent director should not be indebted to the company in which the person is going to be appointed as the independent director. And the relatives of the independent director shouldn't have given guarantee to the third party who has taken loan from the company or from the holding company, subsidiary company, or the associate company. It is to be ensured that there is no kind of guarantee is being given by the relatives for any third party for an amount of rupees 50 lakh or more, either during the current financial year or during the 2 preceding financial year. And the independent director should not be the promoter of the company or of the holding company or the subsidiary company or the associate company of the company in which the director, the individual wants to act as the independent director. And the independent director should not be related to the directors or the promoters of the company or its associate, subsidiary or the holding company. And there should not be any financial relationship with the company except for the remuneration which the independent director has the eligibility to get. And this kind of financial relationship should not be there either in the current financial year or during the 2 preceding financial years. And the individual or his or her relative should not have held any of the key managerial position like the corporate secretary, or for that matter the chief executive officer. They are not supposed to have held any of the position either in the company or with its associate company, subsidiary company, or the holding company. And they must not have been the employee or the proprietor or a partner either in the company in which they are planning to act as the independent director, or with any of its associate, subsidiary and holding company for the past 3 financial year. And the individual along with his or her relative shouldn't have held together a total voting power of 2% or more, either in the company or its associate, holding or the subsidiary company. And the individual cannot, or his or her relative cannot be the chief executive officer or the director of any non-profit organization which receives the receipt up to 25% from this company, or they should not be having 2% or more of the voting right in the particular company. Now let us look at the role of an independent director. The independent director should take all the decisions independently, and their decisions should not be influenced by any of the members of the company. So they should have the tenacity to withstand any kind of pressure that they would be getting from different stakeholders of the company, including the members. And the independent director is expected to be very futuristic, and they should work towards the succession planning, like what are all the key managerial positions for which they have to look for the right person in the future. And whatever independent decisions that they have to take, which happens during the board meetings, like deciding on any of the strategic decisions like mergers, acquisitions, or deciding on any kind of important policies for the company, these decisions have to be made independently by the director, and they should not get influenced by the deliberations that happens in the board meeting. And they have to do an objective evaluation of the performance of the board of directors as well as the management of the company. They have to scrutinize, monitor and report the management performance in the most objective way. They should not bring in their personal prejudice while evaluating the performance of the management. And one of the major role of the independent director is to take care of the interest of the stakeholders. They should ensure that whatever decisions that are made for the company, that it safeguards the interest of all the stakeholders of the company. And it is their duty that they should check whatever financial information that is being shared by the company, that it is true. They have to check the integrity of any kind of financial information that gets shared by the company to the stakeholders. And one more role of the independent director is to come with the appropriate remuneration for all key managerial positions like the company secretary, chief financial officer, chief executive officer, etc. Now let us look at the conduct and the duties of the independent director. The independent director is expected to uphold the ethical standards of the company, and they will have to act in the most honest way. And they should also ensure that there is no unethical events happen within the company. In case the independent director comes to know of any kind of unethical practices, and they should ensure that it gets reported. and the independent director has to act constructively and objectively while exercising any duties. Their personal prejudice should not come into the picture, and they should not be influenced by other members of the company, and whatever decisions that are made, they will have to keep in mind the interest of the stakeholders, and any decisions that are made, it should be done in the most objective way. And they have to exercise the power in such a manner that it protects the interest of the company. They have to take decisions in the most informed way. When we say informed way, the independent directors should actually keep upgrading their skills as relevant to the company, and they will have to ensure that they attend all the general meetings, all the board meetings. They should be aware of what's happening within the company, and they should also be aware of whatever things that happen around in the environment, so that whatever decisions they take, it would be an informed decision, and it would be the done in the most objective way. So they are expected to upgrade their skills. They will have to attend all the annual general meetings and the board meetings whenever they can, and they will have to know what happens within the company, and they have to be abreast with the environmental changes. And they should see to that any of the external factors influence their decision making process. So they should not succumb to any kind of pressure from any of the members of the company while taking the decision. And any decisions that they take, it should be in the interest of the company. They should not take decisions in order to get personal benefits. If they are going to look at their interest and take the decisions, then it is against the role of the independent directors. So any decisions they make, it should be for the interest of the company, and it should not be for the personal benefits of the independent director. And they should also ensure that the company follows all the corporate governance norms, because the presence of the independent director adds credibility to the company, and it is one of their duties that they should ensure that the company follows all the corporate governance norms, so that it brings lots of transparency in all the financial transactions of the company. Now let's look at what are all the other considerations that are there with respect to the independent directors. The independent director is supposed to declare their criteria of independence at many occasions. The first occasion is when the independent director is appointed for the first time, and when the independent director is going to attend the first annual general meeting, they will have to declare their criteria of independence, why they are considered to be independent. So they have to declare that. Again, in every financial year, in every first annual general meeting, the independent director has to declare their criteria of independence. The third occasion is whenever the circumstances arises wherein the independent director has to declare their independence to the members, then they have to declare their independence at all those circumstances which warrants for their declaration. And if we see their term, they can serve a maximum term of 5 years, and they cannot continue the position of the independent director not more than 2 consecutive terms. When we say 2 consecutive terms, they can be there for totally 10 years, not more than that. First term would be 5 years, and they can be re-elected, and they can serve for the next 5 years. So at the max they can serve for 2 consecutive terms. In case the company wants the independent director to continue more than this 10 years, then the company can allow that only after passing the special resolution. And in case the independent director resigns the job, or his or her term comes to an end, then the vacancy to be filled within 3 months from the date of the vacation. Then if we look at the number of companies in which an individual can serve as the independent director, we can see that an individual can act as an independent director in not more than 7 listed companies at a time. At the max, an individual can serve as the independent director for a maximum of 7 listed companies, not more than that. Then this independent directors cannot retire by rotation, so they do not come under that particular category. So whenever the company decides on the number of directors who would get retired by rotation, so the independent directors cannot be counted in that, and they will not be counted even under the total number of directors for calculating the number of directors who will retire by rotation. Now let us move on to auditor. Who is an auditor? Auditor should be recognized as the chartered accountant under the Chartered Accountant Act 1949. Only those individuals who are recognized as a chartered accountant under the Chartered Accountant Act 1949 can act as the auditor of the company. And it's mandatory that every company should have an auditor. And what does this auditor do? Auditor, actually the main role of the auditor is to protect the interest of the shareholders, and they should check the financial transactions of the company. They should ensure that whether the company has followed all the rules that has been specified under the law, and whether they have adhered to all the provisions of the Companies Act of 2013 with respect to maintaining the financial records. They will also check whether the company has complied with all the taxation norms. So they would be basically scrutinizing the financial transactions of the company, and they will also check whether the company has followed all the rules and regulations as specified by the laws as well as specified by the provisions of the Companies Act 2013. And as I have already told, the main objective is to protect the company from any kind of fraudulent activity. In case the auditor senses that there is any kind of fraudulent activity with respect to any of the financial transactions, they will bring that to the notice of the central government. Now let us look at the first auditor post incorporation. So here we are talking about 3 types of companies. One is a non-government company, another is a listed company, and the third one is the government company. In the case of non-government company as well as the listed company, the first auditor can either be appointed by the board of directors or they can be appointed by the members. If the first auditor is appointed by the board of directors, then this appointment should be done within 30 days from the date of registration of the company. If the first auditor is to be appointed by the members, then this appointment would be done at the extraordinary general meeting within 90 days of the incorporation of the company. In the case of a government company, the auditor would be appointed by the Comptroller and Auditor General of India, and this appointment has to be done within 60 days from the date of registration of the company. In the government company, auditor can also be appointed by the board of directors or by the members. If the appointment is going to be done by the board of directors, then it is to be done within 30 days from the date of registration. If it is to be done by the members, then such appointments are done in the extraordinary general meeting within 90 days from the date of incorporation. Next, let's look at the auditor at the first appointment of the auditor at first annual general meeting, as well as the appointment of subsequent auditors. In the case of the non-government company, the subsequent auditors would be appointed by the members and their term would be for a period of 5 years. And in the case of a listed company or a specified company, the auditor would be appointed for a maximum period of 5 years, or for 2 terms, that is 2 consecutive terms, that is for 10 years. In case an auditor has served for a period of 10 years, they cannot be appointed as the auditor for the next 5 years. We call this particular period as cooling off period. So, they can be appointed post that 5-year period only. So, I will repeat, in the case of a listed and specified company, if the auditor has subsequent auditor is to be appointed, they can be appointed for a period of 1 term, that is 5 years, or for a period of 2 terms, that is 10 years. And if the company wants to continue with the same auditor after the 2 terms, they cannot appoint that auditor for the next 5 years. They will have to wait for the 5 years to lapse, which we call that as the cooling off period, and the auditor can be appointed only after the 5 years period for further appointment. And in the case of a government company, the subsequent auditors would be appointed by the Comptroller and Auditor General of India, and the CAG would be appointing them within 180 days from the 1st of April. Now, let us look at the casual vacancy that would be filled due to the resignation and for other reasons. In the case of the non-government company and the listed or specified company, the appointment would be done by the members, and this appointment would be done within 3 months based on the recommendations of the board of directors. The auditor who is appointed to fill the vacancy, casual vacancy, they will hold the office only till the next annual general meeting. In the case of the government company, the appointment would be done by the Comptroller and Auditor General of India, and this would be done within 30 days of the vacancy that has happened. Now, let us look at the duties of the auditor. Section 143 of the Companies Act 2013 deals with the duties of the auditor. The first duty of the auditor is to prepare an audit report, because one of the primary role of the auditor is to scrutinize the financial transactions of the company. They have to check all the accounting statements that had been prepared by the company, and they will have to check whether the company has followed all the rules and regulations, and they will also check whether the company has followed all the accounting standards which they are supposed to follow. So, based on these scrutiny, the auditor would be coming out with the audit report, wherein they will give their opinion about the company's financial transactions. They will also give their opinion about the financial position of the company. And this particular report is very important because it is going to be done in a very unbiased manner. So, their report adds more value to the stakeholders. The stakeholders depend on the kind of inputs the auditor would be giving. Whenever the auditor prepares the report, not necessarily the report should be favorable to the company. If the auditor feels that the financial performance is not good, or there are any lapses in following the rules and regulations, they can always give their adverse comment about the company. That is why this particular report adds more value to the stakeholders, because they are going to get the opinion from an expert who has scrutinized the accounts of the particular company. In case the auditor is unable to give any opinion because of lack of information of the financial records, they will be making a disclosure stating that they are unable to make a proper comment about the financial records due to lack of information. So it can be either positive or adverse. When they are unable to give their opinion, they will come out with a non-disclosure stating that they are unable to do it because of lack of information. And it is the duty of the auditor to make enquiries. This making enquiries means there are some circumstances in which they will have to probe into things, especially whenever the loans and advances are made by the company. They should check whether the loans and advances that are made by the companies against securities, whether they are properly secured or not. That should be checked, and they should also check whether the terms and conditions of the loans and advances are fair enough. So they have to make this enquiry. They should also make the enquiry whether the loans and advances that are made by the company are not put under deposits. They should also check that any of the personal expenses made by the members are put under the revenue account. They should also make enquiries whether the company has followed all the accounting standards or not. So these enquiries have to be made by the auditor while scrutinizing the financial records of the company. And sometimes auditors would be appointed not as the company auditor but as a branch auditor. When an auditor is being appointed as the branch auditor should lend support to the company auditor. This branch auditor should scrutinize the financial records of the branches for which they have been appointed as the branch auditor, and they have to give their report to the company auditor, because the company auditor would be preparing the audit report for the company based on the inputs he or she gets from the branch auditor. And if it is requested by the company auditor, or if the branch auditor feels, the branch auditor can share the snippets of all the calculations, all the verifications that had been done by the branch auditor to the company auditor, so that the company auditor would get more clarity on the scrutiny that had been done by the branch auditor. And they should ensure that they are complying, the auditor complies with all the auditing standards which they have to follow. The National Financial Reporting Authority has auditing standards for the auditor, which the auditors are supposed to follow. So auditors should ensure that they follow all the auditing standards that had been specified by the National Financial Reporting Authority. And when they are going to follow all the auditing standards, actually it makes the job of the auditor pretty easy and pretty organized. So one of the duties of the auditor is to comply with all the auditing standards. And the auditor, while scrutinizing the financial records of the company, whenever there are going to be any kind of unusual transactions, wherever they do not have any supporting documents, they can easily find out that there is something going wrong in the maintenance of the financial records. Wherever they have doubts, the auditor should report this fraud to the central government by following the appropriate rules and regulations. And the auditor is supposed to adhere to the code of ethics and code of professional conduct, because the auditor has to maintain confidentiality. There are two things that come into the picture. One is maintaining the confidentiality, and next when we say the maintaining the confidentiality, what we mean here is the auditor is not supposed to leak any kind of the company information to the outsiders. So they have to follow the confidentiality, and they have to ensure that they maintain secrecy, and they are not supposed to share the company's strategic information to the outsiders. So the auditor is supposed to follow the code of ethics and the code of professional conduct. And if there are going to be any kind of investigation that's going on about the company with respect to its financial transaction, the auditor has to give their assistance to the investigating agency in order to help them in getting more information about those aspects where there are any kind of fraudulent activity in the financial transactions. Next, let us move on to the rights of the auditors. The first right of the auditor is to access the books and records of the company, because one of the primary job of the auditor is to scrutinize the financial records of the company. So they should be given access to all the financial records of the company. Then only they can come out with the proper analysis of the financial transactions, and they can give the right kind of observation about the financial transactions of the company. So it is the duty of the company to give the access to all the books and records of the company. The next is the auditor should attend, they have every right to attend any general meetings of the company. So even whenever they have doubts which they want to get clarified with the members, they can always raise their doubts in the general meeting, and it is the duty of the members to clarify any of the doubts that the auditor would be having. And they have the right to receive notices and other communications, especially with respect to the conduct of the general meetings as well as the special resolutions. So they have to be informed about whenever the company goes for any kind of general meetings, or whenever they're planning to pass any special resolutions, they have to keep the auditor informed. So if the auditor wants, the auditor can very well attend the general meeting and raise any kind of doubt. In case the auditor resigns the job, or if the auditor is getting removed from his or her position, they have every right to be heard. So they should be given an opportunity in the general meeting to explain their stand with respect to the removal of the auditor. Then the auditor has the right to report to the members. When we say report to the members, what we say here is at the general meeting, the auditor can normally what they do, they prepare the audit report, they read out their report to the members in the annual general meeting. So they have every right to share the information about the financial position of the company to the members in the annual general meeting. And whenever the auditor senses any kind of fraudulent activity that happens within the company, they have every right to report it to the central government by following all the proper rules and regulations. In case the auditor has any kind of assistance, in case they require any kind of assistance with respect to the delivery of their duties, with respect to their rights, they can very well seek any kind of legal advice. And the auditor has the right to get remuneration for the work that they are doing. The remuneration would be fixed by the members in the annual general meeting. So they have the right to receive the remuneration, and to the extent that has been fixed by the company in its general meeting. And wherever they have doubts and wherever they need more explanation and clarification from the directors of the company, it is mandatory that the director give the right clarification to the auditors. And they have the right to be independent. No one can be influencing them, and they would be operating in the unbiased way, and they have every right to operate independently and not getting influenced by the members. Now let us look at the resignation of the auditor. And whenever the auditor plans to resign from the post of the auditor, they will have to follow the rules and procedures that had been prescribed by the Companies Act 2013 as well as by the Companies Audit and Auditors Rules 2014. There are certain aspects that has to be done by the auditor whenever he or she plans to resign from the post. First thing is, the auditor has to intimate to the company that they are resigning. They have to give an explanatory note to the board of directors why they are resigning. The reason has to be given, and the board of directors should convene a board meeting within 30 days from the date of receiving the resignation letter from the auditor, and they normally do it in order to discuss about the resignation of the auditor. And if there is going to be an audit committee in the company, this resignation letter would also be, a copy of the resignation letter would also be given to the audit committee for review. And it is mandatory that the auditor, when he or she gives the explanatory note to the board of directors, they should also give an explanatory submit an explanatory note with the registrar of the companies on the reason for their resignation. They will have to do that. In case the auditor doesn't do that, then they will be penalized for that, and the penalty would be up to rupees 50,000 or the equivalent to the auditor's remuneration, whichever is lower. In case the auditor, after even paying the fine of rupees 50,000, they don't file that explanatory note to the registrar of the company, then every day they will have to pay a fine of rupees 500, and they will have to keep paying that amount up to it reaches 5 lakh rupees. And the auditor should also give a special notice to the board members, to the members of the company, that they are resigning from the job. Thanks for listening.